Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, November the 5th, Election Day 2024 in the USA. Let's talk trading. Trade direction with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And a friendly reminder, risk management. Never lose more on any one single trade than you're willing to lose. And Walmal, you said that we might be saying that, we might be able to say that a little bit better. You want to tell the traders what you were thinking? You mentioned it to me yesterday.
Yeah, my idea is a little bit different than losing on a single trade. My idea is more of losing. You're only allowed to lose what you're willing to lose in total for the day or for the trade, whichever way you want to break that down. And the idea behind that is just that, it allows you a little bit more room in terms of what your risk management is. And as long as you're strict with it, it can't hurt you. In other words, if I'm willing to lose, let's say, $100 for a particular trade, then that's what I'm willing to lose. If I'm willing to lose $200 for the day, and I look at it from that perspective, then what that does for me is that on this particular trade, I'm willing to lose $200. And what does that do for you? Well, we know that sometimes when we go into a trade, it needs to go and develop, and we sometimes either accidentally or just because of the way the market moves, it takes a little bit more time to go and develop before you actually go and able to take your money out. Now, here's the risk of that. Okay, if you're not paying attention and if you're not going and really being very strict with that, you could very easily in one trade lose what you're willing to lose for the entire day. And by doing that, you're out of the game a whole lot faster, or you're not paying attention. And then what happens is that you take a much bigger loss than you really should take. And so, as always, trade at your own risk, or swim at your own risk, trade at your own risk. I personally don't do it this way, just because what it does for me is it means that I can go and maybe take on a little bit more risk where it doesn't actually hurt me. And it works for me.
Yeah, well, and to expand on your example, what you said was, if you're up 500 for the day, then you said you could actually, lose 600 on a trade, but you've only lost 100 out of your account.
Exactly. Now, of course, there's going to be a lot of people who are going to go and, I'll play the devil's advocate on that. A lot of other people say, once the money's in your account, it's your money. Don't go and risk that. And they're right. There's absolute truth to that. And then, of course, there's the other set of people on the other side of the fence who go and say, never risk your own money to go and to go and earn money, risk somebody else's money. And until they look at it from perspective, until the end of the day or the end of the week, the end of the month, whatever that artificial timeline is, that money that's there that you may have earned, they look at it from perspective, that's money that has been, yes, it's been earned, but it's money that's allowed to be used as risk money. So, different folks, different strokes, I guess. But at the same time, you got to go and pick your poison. And you can't go, I think the biggest issue is you can't go and, look at things from the perspective of, that sounds good over there, I'm going to pick that. That sounds good over here, I'm going to pick that. Next thing you're picking things all over the place, and maybe there's contradictions in those picks, and then next thing you know, you're in trouble because, you've gone and mitigated or eliminated all the protections you wanted to put in place. So, in other words, pick a set of rules, stick by the rules.
Yeah. So yesterday, you were buying and I were selling, and we both wound up with buckets of pips.
Yeah. And this is not I'm not bragging, but at the same time, I'll go and say that I made 62 pips yesterday, and I know you made a bucket of pips as well.
I think I made 49.
Yeah, and the funny part was I had 18 trades yesterday, and every single one of them was a sell trade. And I think you had, in your 42 pips, if I recall correctly, every single one of your trades was a buy trade.
No,
And
you were buying, I was selling.
that's right. It was the other way around. You're exactly right. But the thing is that it just shows you this whole idea of what is the market direction. That's more important than anything else. I don't care if the market's going up. I don't care if the market's going down. You can make money off of it. You just got to go and use your method, see what the market is doing at this moment in time. Because what was happening was yesterday is that I would go into a trade and you would be exiting a trade. And then what would happen is I'd be exiting a trade and you'd be going into a trade because the market swings back and forth. Go and look at the market. What I think the best way to go and see this is take your chart and put up a 1 minute chart, and instead of having candlesticks on it, change it over to a line graph and just look at it. Just look at the line graph, and what you'll see is basically a big wave going across the screen. And sometimes it goes up the wave, and sometimes it comes back down. It goes to the peak, and then it goes down into the trough, back and forth. Now, there may be a trend in an upward direction or a trend in a downward direction, but on the way, it's going up, going from peak to trough in whatever direction it's actually going in the market. And the way I'm trading, and I know you're trading this way too, is that we're not looking necessarily to go from the, following the quote unquote the trend of the market. That's not what we're doing. What we're doing is we're trading the wave that's going across. In other words, let's go and say the market is quote unquote trending down, okay? But there's going to be some type of, it's not going to go down in a straight line, or very rarely will it ever go down in a straight line. It's going to go up, it's going to go down, it's going to go up, it's going to go down. And so what you can do is when it's doing that oscillation from up to down, you can pick up 2, 3, 4 pips and those little oscillations up and down. And so that way, by doing that, you can go and actually make money. You can actually be going and buying in a market that's going down and make money, because all you're doing is you're picking up those small little pips that are, when it goes in, makes those breaths, takes those deep breaths and go and let the market catch up to itself. And, and you can, and vice versa, you can do the same thing in the other direction. And the thing is, in order to do that, you need to go and be paying attention to what the market's doing, and you need to go and make your decisions based off of what you see. In other words, it's sort of like your old adage that you used to say almost every video, and that is trade what you see. And that's what you got to do. You got to trade what you see.
Yeah, I switched over to a line chart and crunched it up so we can see about the last over 3 hours. And it's like almost a rocket ship right here going straight up.
Yep. But even on that, because I just threw that up on my chart as well. But you can even see that there were a couple of times when it bent over a little bit. But in this particular case, it didn't do it. But look to the left of the previous hour. Now you look at previous hour, you see all those ups and downs that it made. And that's where that's where I make my money. I make my money there on those little ups and downs. And then what you hope for is you get into like that rocket ship that you're talking about there. You hope that, hey, one of these times I can get in there and catch a wave on the upward direction, and then I'm able to go and hold on to the trade and pick up 10, 15, 20 pips, whatever it may be. Does it happen often? Well, unfortunately for me, not very often, but it does happen. But that's how I play the market anyway.
Mm-hmm. Yeah.
And what's really what I think, just one last thing.
Yeah, go ahead.
if you look, if you throw in the EMA5 on the chart, if you see that price is basically following along, you know, the EMA5, meaning it's crossing it back and forth, that shows you that the market is really going quote unquote sideways, you know. But that's the opportunity where you can go and pick up these, you know, little bit of movements up and down, up and down. But if all of a sudden, like in the last hour, where where price is above EMA5, that's telling you, aha, okay, I can't be. This is probably not a good time to be looking for a down, you know, a short trade here. This thing is pretty obvious that it wants to be above that price, and until this thing crosses over once or twice, we know that's the type of market we're in. And potentially, if I get myself into a long trade, maybe I can go pick up a bunch of pips. So my one and only usage of a squiggly line.
Yeah, I just switched over to the one chart, your old trading chart here. And we'll have the indicator, okay, 2 dots, and then I change it to a line.
Right. Yeah, and that's, you know, what does that do for you? Well, what it's doing is it's giving you hints. That's the whole thing. You know, we're not going to be right all the time. In fact, you know, all you got to be doing right is maybe, you know, 51% of the time, and you know, you can really clean up. And the reality is, if you take care of your money management properly, you can be right only 20 or 30% of the time, and make a bucket of money too. So again, pick your poison, stick to it, work it out.
Hey, we're hitting that double O. This is going to be interesting.
Yeah, I've been saying it's got to hit that thing for the last couple of days, and it keeps on running away from me.
Yeah, well, yesterday, the reason I kept going short was because of the open gap, which I think still hasn't filled. Let's see, where's my... Oh. Yeah, we still haven't filled the gap. And looks like we're wants to break out of yesterday's high and the high from bar 3 on the daily chart. We've pulled back from this level 1, 2, 3 times. We've broken it 4 times. We've broken it once on the daily. So it looks like it wants to break it again today.
Yeah, if you look at the daily chart, it's just screaming, I want to break this thing.
Right. And it looks like, yeah, we just hitting 100 pips. No, 51 pips on the range. 52 pips on the range. We're 51 pips off the low.
Yeah. And just going back to what you were saying, if it goes and breaks the area that's in right now, meaning gets above that double over 3,000, it's got a clear run all the way up to 30, 41 or so, and so there's possibility of making 40 pips. I know I'm repeating you a little bit, but it's very enticing.
Right. Yeah, just if the traders are wondering, I've got these blue and green lines across the chart, and pretty much what I did was I think I started with the month. I need to switch this back over to candlesticks, and I was drawing lines, and then I went down to the week,